Okay, everybody, give me a sound check, please. Hopefully you guys are doing okay. Sound check, sound check, sound check. You guys can hear me, see me, all that good stuff. Okay, I see we got, let me just make sure on my end it looks okay. That good stuff. All right, looks okay on my end. Hello, everyone. All right, if you guys can hear me, actually, I think you can hear me because I'm just testing it out. Okay, yeah, you guys can hear me. All right. If you can't, let's do that. All right, okay. So, I'm excited about today. I think it's going to be good. We're going to go over some really critical foundational stuff. If we look inside the members area, one of the most important things, actually, let me pull it up here. One of the most important things is that we learn how to make good decisions, okay? Making good decisions. So right here, step 3, the decision framework, right? Really important on how we think about trades before we place them. And so today, what we're gonna do is we're gonna go through and we're gonna learn how we make good decisions. And hello, Jensen. We're gonna learn how to look at this long-term, look at the account objectively and not emotionally, and we are going to make a solid decision based off of our decision-making framework, right? It's really important to be successful long-term. You've got to be able to process and make decisions and not be emotional, right? Really critical stuff. Okay, so with that being said, let's just jump right in. I'm also going to go over our new scanner that I'm looking at releasing as well. Okay, because I got a new scanner. I'm very excited about that. So we're going to go over the scanner and over the decision-making framework. And so I'm going to go over an actual trade that we are in, and we're going to talk about it. And so let's look at the spreadsheet first. Okay, and so the spreadsheet will show us that we have, if we look at the summary here, we've got a nice growth rate, which is what we're looking for. You know, we leveled off a little bit, but then we spiked up, and now we're just doing okay, right? Making income. February's getting close to a close. Nothing spectacular, but right where we were at last year. And you'll have that, right? And we'll see where we're at next year. You know, we want to look at this in advance, right? So February, 652, 648, and who knows where we're going to be next year. I mean, it will be a kind of exciting. We might be at like 2,000, right? And we also got to remember February's can be down months, right? So we'll see where we're at, okay? So right now we have our cash deployed at 50%, and we're a little bit over, right? We're a little bit over, and the recommendation is 35%. Our current VIX is at 21, so I'm a little bit over on my cash deployment. We also have some positions that we're holding on calls, and right now it's SoFi. We have a call on SoFi. You can see right here it's a call, and this one is generating some cash. So we have 200 shares of SoFi. We also have a position on OKLO, right? Now, this one's a good bit underwater, and so that's what we're going to talk about today, on making good decisions, on managing our trades, not being emotional. How are we going to make these decisions, right? So if we look at OKLO, we got in originally at 120, That was the original strike, and now it's trading at 63. So it's a good bit underwater, like 50%, right? It's like 50% underwater. So we need to go through our decision framework and say, well, are we going to cut the loss? Or what are we going to do here? How do we handle this trade? So that's what we're going to do today. So we're all about making high returns, and when I say high returns, I'm talking cumulatively over a small period of time, over a long period of time. We're looking at when we are trading, we want to look at making good decisions, and we want to do it over a long period of time, and we want to look at our account over a long period of time. And what that means is making small growth consistently each and every week. And if there's something that's going to inhibit our growth, we're going to make a decision, and we're going to use our decision framework. This is built out in step 3. This is an actual case review on a real trade in the membership. And so this can be used as your guide so that you can learn how to make these decisions. So the first one we're going to look at is OKLO, right? The position review. We're going to look at the technical side. We're going to look at the fundamental side, and then we're going to make a strategic decision. And this is Freedom Income Engine level decision framework, right? We want to be institutional type traders. We're creating a system. If you're creating a system, you've got to know how to judge trades, right? How to make a rational decision when a position is down, right? This is good. This is good stuff. Okay. So, at least I think it is. I'll let you guys reply later. But anyhow, right now, what are we looking at? We're looking at the chart. All right. And what we notice is that there was a massive run up, which indicates a lot of excitement. You see this? This is big. I mean, this is like, boom, huge. I mean, we're talking, we went from here at $17 and all the way up to $193. That is high flying. That's a lot of excitement, right? And so there's usually a reason for that. Right? There's usually a reason for that. So that's the first thing we got to understand. We're looking at charts. We're going to go over fundamental in a minute. And at the end, we're going to make a really good decision on this. Okay. But the first thing we want to look at is, okay, there's a reason for this. Second of all, this is very common. We get a big move. Okay. What happens in here? Profit taking, right? Everybody up here, profit taking. And now it comes back down, okay? And then once the profit take, we look at market in cycles. Once the profit taking phase comes in, what happens next? We have the fear phase, right? And I should have prepared by giving you one of those market graphs. I've studied them a lot about the cycles of the market, about greed and fear, right? So here is the anticipation phase. Here is the, oh, I need to get some of this phase. And then up here is the greed phase, right? Greed. And then this is the sell-off. And now we're in the fear phase, okay? And it's starting to really accelerate. So in the fear phase, we could have a similar thing happen. You see this big spike up? We could see a similar spike down at the fear, and then a nice big bounce, possibly, or maybe it just dies. Sometimes stock dies. Not every stock is going to come back, right? This is the types of things we have to do when we're making our decisions. We're just going through the options right now. We're thinking like strategic professionals, right? And everyone in here is a strategic professional because we're replacing our income with options. All right, now, so if we look at this, you can see it's had a massive run up, sharp correction. Now it's trading well below highs, and it's in a reset. It's kind of at a base. I'm not going to say that the bottom is stopped, but it is at least slowed down for the last month, right? And it did that before. It dropped and it spiked, and so that's where we're at. Okay, right. So where are we structurally again? We're below the 200 period moving average, which for me, that's my criteria. I don't trade anything below that. So right now at this point, it's like, okay, this stock just exited my criteria. once it came down here and bounced, I'm like, okay, we're still in gear, but then it came down. So that's the first thing we got to know. That does right there, it's out of my rules. The next thing we want to look at is, okay, there's a key level right here, right? So we're talking about structure and technical analysis. There's a key level here, key zone right in here. And so this is what I'm looking at as a support zone, not just the 60 level. I think this is a little bit below there, but this is like a zone. And why do I call it a zone? Because it's a box and it's a top and a bottom, right? So the top and the bottom both work as support, but it's currently at this zone. The recovery zone is, I would say, it needs to break this trend line, right? So right now we're still in danger zone. It's building a base here with a square, but it needs to break this trend line, and it needs to, build another base and then pop and then build another base and then pop, right? It needs to reverse. And so we'll see that happen around the 75 to 80 mark if we can see that happen, right? So we know right now we're not in the recovery zone. We're not in the destruction zone, which would be down here. But I would say that we're in a high level of fear, right? And we can feel that ourselves. If we're holding the trade and we're down, I'm sure we're feeling the fear. It's not a good feeling. But we're income machine traders. We're freedom income engine. We're replacing our income with options. We don't base our decisions on how we feel, because we know that fear in the market is money for us, right? We're making decisions. When VIX goes up, we make money, right? So right now, if the VIX goes up, we could make some money on this. So we're just, again, I'm not being greed based, but I want to cover all the angles. Okay, so that's the technical analysis. I'm still okay with this right now. If it does break below this box, that will be a lot longer to recover from, and so that's something else we got to consider. All right, let's talk a little bit about a fundamental, and then after the fundamental, I'm going to talk about our trade. And a lot of you guys are not in on this with me, but I know some of you are, right? But I want you guys to see and do exactly what I'm doing, and not necessarily do what I'm doing, but learn from my thought process. And, total transparency. All right, so with that being said, we're in a high volatility with this stock. This stock pays good premium, right? That's why we got into it. We like stocks that have good premium, and sometimes that comes with a risk, right? Because why? Because of this. Volatility, higher premiums can mean price swings, which is what we're at. So all we got to know now is that there are still good premiums to be had on this. Just let's take that into consideration for the future. All right, so let's take a look now at OKLO as a business. It's a nuclear company. Energy is really hot right now. Why is it hot? Because of AI, because of data, because of robotics, because of chips, right? Because our lifestyle is consumed by energy. Everything we have has energy now. Everything. Right? And so we are in desperate need of energy. Clean energy is also really good, and high-tech energy. So this is a clean energy, also a high-tech energy. Right? So the more energy breakthroughs we have, the better. All right. So that's one thing you got to know, is that there is a lot of opportunity and potential because it's in the nuclear energy phase. Okay. Next, it's in a development part, right? They're still getting started. They're still laying out groundwork. They've got a ton of deals, right? They've got a ton of deals, which equals a lot of excitement. They have a deal with the DOE. Okay, that's the Department of Energy. Hey, government deals are good. I actually have a friend that works for Westinghouse, and you know what? It doesn't hurt to have friends, because you learn things. And I just learned how much sweet money that Westinghouse deal is for them, because they work for the government. It's pretty sweet. So anyways, DOE, Department of Energy, okay? They got a deal. They have a deal with Meta. So they have a deal. So this is a separate deal. They have a deal with Meta. That's Facebook, for those of you, to develop a power plant just for Meta and some of their data centers. Okay, so that's a big deal. This one's big. And then they have another deal with some other countries, right, to develop some places, right? And they have a big, huge facility that they have a deal in the works for in Tennessee. So they got a lot of deals, okay? A lot of deals. So I'm just going through the overview here, right? But it is in development. It's in development, meaning they haven't, they're pre-revenue. They are still working out details, and there's some risks in this. Because why? Because the deals means that things could fall through, right? And one deal falls through, we're in big trouble, right? So we want to be aware of that. But the good thing is they have 3 deals, and if any of the 3 pay out, it's going to equal, which increases the odds of the deals working, it's going to equal big revenue, okay? Again, we'll go over the risks here in a minute, but this is a longer term. So yes, it could spike up really fast, but it could also grind for a while or even go lower, right? Because, whoa, people are getting nervous. These deals are taking longer. So let's talk about the risks. Well, right now, no consistent revenue. Regulatory, if working with the government, and it can be good, but it can be bad. It has a long commercialization runway, meaning it's going to take a long time to develop some of these things. But again, there's some other benefits too that I could go over, which I will. Okay. So anyways, why investors like it? We already talked about that. High data center, partnerships, analysts. Let's talk about the analysts. Analysts are bullish. Let's take a look at some of the analyst reviews here. We've got strong buy, 2 buy, 9, and then hold is 5, and then there's 3 sell. So a pretty strong buy rating. There's a few sells, but overall, this is 11-3, pretty strong, okay? I'm pretty comfortable with this. All right, the price target consensus. So we're looking at right now trading at 62. So there's a lot of upside. So we own 100 shares. I, in our portfolio, own 100 shares. There's a lot of upside there, right? So that's good. The stock analysts, 116, 78%. Benzinga, 112. And market beat consensus is well above the current level. So we got a lot of upside here based off of targets and analysts. Okay, does it mean that we do by whatever the analysts say? Of course not. Of course not. But so, anyways, the analysts are bullish, and that's just what we need to know right now. So, let's take a look now at our trade. Our trade. Okay, this is our trade. You're going to see that we got in at 120, okay? And I'll go over the spreadsheet here. The premium collected on the trade is $2,500, and after you adjust that, it's $94.56. So we earned about $25 a share of cash flow on the trade so far. Right, and so it's $62. We've earned $25 of cash flow, which is pretty nice, right? The current price is $62, but we're down. If you see on our screen, if I look at the broker account, we're down 48%. All right. Now, with that, so if we're down 48%, once we add the cash flow in, we're actually only down 34%. Still not beautiful, but it's not quite as ugly, right? It's not quite as ugly. Because the broker, when you look at the screen and it's showing negative, it can be a little scary to see that, right? So we want to not operate in fear territory. We want to operate in information, education, decision-making framework. And so I'm just giving you information right now. I'm processing information. And then from there, we're going to make a really good active decision. Okay, so the psychological shift. The loss is actually smaller than what it looks like. The premium matters in total return, and time plus volatility can improve our position because we know it's a volatile. If we get a nice spike and we're selling calls on it, we're in good shape. So we're not in emergency mode. We don't really have anything to be fearful of at all. Okay, so if I could go back to that. I can't. How do I get back? Okay, yeah. Perspective reduces pressure, right? That's what I wanted to get to. I feel like if we can understand and have the right perspective and really frame it and not be emotional, then we're not going to be like, oh, stressing, right? I hear comments all the time. Oh, there's a lot of things that create stress. Oh, I'm nervous. Oh, I'm fearful. Oh, I need to do this quickly, right? These are all things that cause pressure and create pressure that we need to work on, okay? All right. So let's now talk about, now that we know the information, we know about the company. Another thing, one more thing that I didn't put on about the company that I want to make sure that you guys are aware, that I'm aware of, is cash flow. You know, their cash flow is very important. They have just raised something like $500 million in funding, and then they burnt through 36 million. Right? So they're not in danger with cash because they got a ton of cash available. Right? So that's another thing to consider. And their cash is going to last a long time because they raised money and they got a lot of big name partnerships. So that helps. Okay, just wanted to put that in there too. All right, so we're going to go through 3 different scenarios here on how we can manage this position. This is where we actually make decisions and we decide on what we're going to do, right? We actively making decisions and how we're going to do it because we're going to go through scenarios. So we're going to assume that we get $150 a month average premium, and that could generate $1,800 a year of income, right? Because what have we already created? We've already done $2,500 in 6 months. So we know that this is possible, right? We know that if we just do calls. Okay, so that's a good thing. Right? So if the stock stays flat, what happens? Well, our cost basis comes down. There could be a recovery and a strong upside, or a further drop. So these are the 3 different things that can happen. 1, 2, 3. So we know that if there's option 1 and we're generating $1,800 a year, what does that mean for us? Well, first of all, I'm good with that. Okay, that's a good outcome. That's a very good outcome. Option number 2 is a recovery with a strong upside. This is a good outcome as well, with one thing to be aware of is that if we get our position called away early because we sell a call, it could equal a loss. So in this case, a recovery could equal a loss if we get called away early. So we want to be very careful with selling our calls. Okay, and then option number 3, a further drop, damage cushioned because of we're selling income. So even if this is the bad outcome. So 2 out of 3 outcomes are pretty good, but the bad one is if it keeps going down, our damage can be recovered if we're still selling. So even the bad is not as bad because of income, right? So selling calls is a good option here. Okay, so now let's go to option number 2, scenario number 2. So that was the first option. We're going to hold and we're going to collect income. Option number 2 is we close it right now, and we're going to realize a $3,250 loss. And I think this is a good time to bring up the broker account. Let me bring up the broker account here, and you're going to see that if we look at it, the OKLO position, I'm going to bring that up. This is it right here. And you're going to see that it says, what does it say? It says 5,746% loss. Okay, that's what it says. However, it's actually 3,250 because we've generated 2,500 in revenue, right? So if we lose this, what can happen? Well, number one is it's a loss, 3,250, but that's not good. But let's put it in perspective. We've already generated 2,500 in cash on it. Okay, so we're losing 3,200, but we already generated 25. And if we look at the spreadsheet, we know that we've already generated year-to-date annual income $4,600. So if we took that loss, we're still in profit on the year. So sometimes when the market goes down, we take these losses, and that's okay, right? Because we're thinking strategically. Why is it okay? Because we're going to continue to create revenue. All right. Now, what else does it mean if we took the loss? So it could mean a lack of stress. Oh man, I was just stressing out because I was afraid this thing was going to drop. Now my stress is gone, right? And that's okay too. Great. But then the other thing is now it's $62 a share. That brings up $6,200 of capital that we can now use somewhere else. So if we deploy this capital, what happens? We could make potentially $2,480 recovery in 12 months, just on average based off of what we've done in the past with 6,200, right? That's not bad, because then it erases most of this, right? 3,250 minus 2,480. So most of this will be completely gone in a year. Okay, so that's the option. The second option is put this money back to work on something else. Okay, so that's not a bad option. Option number one, keep selling calls on it, is not a bad option. Option number two isn't a bad option. They're both good. Okay, so again, this is a quick little review. Option A, we sell money, sell calls on it, and we lower it, and we accept time as our ally. Best for long-term conviction plus patience, right? So this is it. So if this describes you, long-term conviction and patience, then great. This is you. That's really good. I believe in this and I have patience. I'm going to go with option A. Okay? So we're now really looking at how we're going to handle this. Okay. Now, let's go to the next option. Option 2, B. Well, we could sell strikes closer to the money because we want to get out and earn a little bit more of this, a little more premium. If you don't know what I mean by that, let me just look at the option chain and explain it. We're going to go to the chain here, OKLO. Let's do a 30-day. Look at this. So these are the calls. It's currently trading at 64.70. Currently, we do a sell right at the, we do here. We make $535 versus a higher probability, like closer to our break-even point, which is 95, $79, right? 79, it's impossible for us to lose out, but here, 540, we're getting our capital back right away, right? So then if you get called away, you still made some more premium, right? And so then this one is good for moderate conviction, like, okay, I just want to get out of it, but let me make some money on the way out, right? That's a good option, right? This is good because now instead of losing the 3,260, we are going to minus 500 from that, right? And now we're only at 2,800 loss or 2,700, right? Again, that makes a big difference. And who knows, we might do this a couple times and make that up even quicker, okay? So this is not bad either, Okay. And then option C, again, we'll sell immediately. We'll lock in the realized loss and we'll redeploy. And again, this is you if stock no longer fits your framework or emotionally drained and you just can't handle it. You're down 5K and it freaks you out, right? I try to help people who are emotionally compromised because that's why I educate like this. But that's, no emotionally compromised people here. We're not emotionally compromised. Okay. So again, if it doesn't fit your framework or if you're emotionally compromised, right? So what this really shows is that we're running math. It's not life or death. It's not catastrophic. It's simply a capital efficiency decision. Now, there is one catastrophic scenario, and, I could go over that, and that is if this thing just tanks and the thing goes out of business, right? And really, if that happens, then there's only one decision, right? There's really only one decision. That's option D, and that is sell immediately, right? But right now, we're not there. But if there's been, I had a friend of mine who lost like $200,000 doing covered calls because he, and I like to do this all from my own experiences, but I've never lost $200,000 in covered calls, thank goodness. But he was doing it on a company that when it was on deals and the deals fell through and the company went under and it absolved and he lost his full investment. Right, so that's what if we find that that's happening here, then we bail on it, right? But I don't see that right now. Yes, there's some risks, but yes, there's some huge upside. It's a handoff here, right? So we have to make the decision. Okay, so now let's go the true differentiator, right? This is how we make good decisions. This is the judgment framework. I have been talking for all this time just to get to this card. And that is this. Is OKO likely to outperform your 1% system over the next 12 months? It's that simple. So if the answer is yes, harvest through volatility through premiums. If the answer is no, redeploy and recover through the income engine. Now, the problem with this is a very straightforward question. The problem with this is no one really knows the answer, right? No one on earth knows the answer to this. But I would say, I'm not even going to share my opinion right away. I want to see if you guys have an opinion. What do you think about this, right? What are your thoughts? You could, okay, great question. And then you guys tell me, what do you think about this? Give me in the chat, guys, if there's anybody here. Let me know. Is this more likely or is this? What do you guys think? But while you're thinking about that, Min asked a great question. He said, if we don't have a position now, is a good chance to get a cash secured put on it and get the stock at 61? The answer to that would be yes, except for one thing, Min. Good question. But the reason why I usually wouldn't do it is because it's below the 200 period. And my rules say don't buy anything new if it's below the 200. Because why? Because it's trending down. Now, with that being said, the 200 is still pointing up. It's still an uptrend, technically, right? But my hard rules is no, right? I would wait for this to pop back up and then do it. That's just how I trade. But with that being said, could this be a bargain? Yes. But again, men, go look at other bargains out there. There's some other ones. I'll talk about that later. But after we're done with the training, because I want to keep this in a training so I can post it in the members area. But yeah, that's a great question. So my answer Anybody have any answers on this? My answer is this. I feel like right now these premiums are sweet. You know, I'm answering this for myself. This is how I'm coming up with my answer. But I want to know, what do you guys think? Is anybody saying no? Let's just roll with it. And is there anybody in here that's in this position? Let me know. But if no one's in this position, this is an amazing educational opportunity because you're learning by what I'm doing and how I'm doing the framework, right? So I'm going to answer this, and I'm answering yes. So that means I'm going to make my decision not based on emotion, but I'm going to go ahead and make it happen. Okay? So, again, the difference, another thing that should help you mentally, the difference between these two paths is not massive. The bigger variable is your confidence and execution discipline. Focus on the process, not the outcome. But we do want to focus on the outcome, but we want to process on how we're going to achieve that. And so again, for me, to get the better outcome, I'm just going to hold and sell. That's what I'm going to do. Okay. And so that's it, right? And one last question, and this one would be great for you men who was thinking about buying this. If it was not already in your account, would you buy it today at 62? The answer determines your path. And really, we know that it's below the 200, but we saw that it made it up to 192. So if some of these deals go through, they start making money from Facebook and the Department of Energy and that other deal, I think it was other countries. Wow, this thing could go to 198. Right back 192, 198. So there's a lot of upside, right? And so for me, okay. Yeah, there's risk, but you're not usually going to get a ton of upside without a little bit of risk, right? The market's all about risk, but we're about replacing our income with options and taking calculated risk. All right. So yeah, hopefully that was helpful. I'm going to actually now make a trade right now because if we look at this, we have a nice pop. It's still moving below the 100 period, but when you get a nice pop like this, you might be able to get some good premiums. So let's take a look and see what kind of premiums we can get. Let's go to 30 days. Yeah, okay, so Chuck is in and he's going. So Chuck, I hope that was helpful. Like I didn't know how you felt about it, but hopefully that helps you make a decision. Okay, so that's good. And that's why I like having this group too, is because we can then discuss it. Like, oh man, okay. You know, and I might not have taken this trade now that I'm getting more and more tools as we go. And I might, in the past, with my new tools that I have now, I might not have taken this trade. All right, so anyways, let's take a look here. I think going for a pretty good premium here with probability. We go to probability, maybe do an 80%. An 80% premium is at 271. That's still pretty good, and it adds to my money. 271, right? We'll just do this, and we'll go to the mid. Let's get $300, 80%, right? $300 at 80%, and if I do get called away, that's at $78, right? So that's pretty good. So I'm just going to make an extra $305 right now. All right, so let's go ahead. We know that we had that in the spreadsheet, so let's add it. Let's add this bad boy to the spreadsheet. So I'm just copying this in, and we got a call today. I've been trading this all the way down, and it's been working out. It's 30 days, so we'll go out here. And the strike price was 78. Premium 305. Same premium, one contract. And delete. Okay. All right, so there we go. We got it added in. And you know, you can something's wrong with my my stock price tool. I don't know what happened. But anyways, we're in good shape right now. We got some more premium. Another $300. That drops our cost basis even lower. Right. Yeah, I just sold a call. That's right. Yeah, the premiums are high. Chuck is right. The premiums are high. And yes, I did sell a call. So hopefully that was helpful. Now, the other thing I wanted to show guys is our scanner. I'm doing a new update on the scanner. It's going to be out very, very soon. So I just want to run through it. It's not too different than what we already have, but it's a lot more efficient, right? So here's the most recent one. Let me update it. So the current scanner, it takes a long time to load. This one's going to be automatically loading throughout the day and scanning for it. And so there's not going to be any load time. Whenever you see it, you'll see it right up here. And it's going to put out the best possible stock. So right now we have Wolf. If we click Analyzed ROI, we have Wolf, AG. And so I'm going to be updating quite a few of these. And yeah. Okay. So this new scanner is going to be out really soon. It's just really clean. It's really nice. Not a lot of difference, but you can go ahead and click and get the report. Like we'll go ahead and get it on Wolf, right? And it'll update. And it takes a minute, but I'm running scans and I'm building all this, and it's going to be a lot more effective. But I really am excited about releasing this new tool. So with that being said, let me answer Min's question. He said, what's the difference between a cash secured put and a covered call? And I know that you said that you have a lot of experience, and so this will be good for you to really kind of refresh. But a cash secured put means you don't own the shares. You're selling a put to earn the shares. A covered call is if you do own them. But what I'll show you, you can go here back to the Member Hub, and inside of Learn the Language, step number 2, they have all of that information on cash secured puts and covered calls right in here. What is an option, calls versus puts, selling options, cash secured puts, covered calls. And I have some pretty good trainings in here. I have a really good covered call training that I did. This one's really in depth, really good, if I do say so myself. Right. So yeah, so check that one out. This is a 41-minute video. Check it out. I thought it was excellent. But all right. So yeah, that's it for today, everybody. I hope that that's helpful. I'll be posting that recording. It's going to be in the decision-making framework. I think it's really important for us to know how to make decisions. That's going to be critical for us in our attempts at replacing our income with options. All right. Well, thanks a lot, everybody. And we'll see you guys. Thank you. That's going to be critical for us in our